Welcome to lesson 5. Mr. Green here. So we've covered a lot up to this point. 4 lessons of a lot of jam-packed information. Good start. Let's keep going. So what are we going to cover in lesson 5? Learning to trade in all market conditions. Bullish, bearish, consolidating. Bullish meaning a market going up. Bearish meaning a market going down. And even consolidating in a market that's moving sideways. So basically what we call this in the trading and investing world is going long and going short. Now, I'm going to show you a little bit about what we would call a 3-directional trading strategy. Now, a 3-directional trading strategy, for some people, they don't understand it. I get it. For some people, they've seen it before, so they're seeing this again. But I want you to really wrap your head around something. The market travels in 3 directions, period. Up, down, and sideways. Most people only know how to make money when the market goes up. That's just common. They don't understand that you have opportunity when the market goes to the downside, which is short selling, which we're going to cover in a few slides, or even when the market goes sideways, which there's advanced trades for that, which we're going to cover in a few slides as well. What I want you to understand is this. We've talked in other lessons about market crashes and the importance of having a strategy that keeps you consistent during all market conditions. So just briefly to kind of recap on that, there's been 15 crashes in the history of the exchange. And when these crashes happen, they last 18, 24 months. The problem is when they crash for 18 to 24 months, they take about double the time to get back to, even playing field, level water. So you have to add, that's a 4 to 6 year window. So if you were in an investment and you only knew how to make money going on the upward, slope, how could you allow yourself to break even or be flat for 4 to 6 years? You couldn't. You couldn't call it a stream of revenue. We've talked about these statistics too. Just another recap: 92% of the people in this world don't have enough money to retire and maintain the same lifestyle. They either A, keep working, B, downsize their retirement, or hopefully C, what you're looking to do is make passive income. 78% live paycheck to paycheck. And the main reason for that is most people only have one stream of income. So if you want to have multiple streams of income and passive income, and trading and investing is the one that you're looking at, you have to learn how to make money in a down market. Let's keep going. Going long. This is the one that mostly everybody already knows about. But I'm going to simplify it for you today. When you get onto your screen, there's 2 buttons. There's a buy button and a sell button. Let's keep it super, super simple today. If you want to this is the one that everybody knows how to do. If you want to make money when the market's going up, or you want to get in a position because you're bullish, or let's take it a step further, let's look at some IOF. You want to be in a position that you're in some demand areas, you see some, imbalances, some IOFs, UFOs, and you place a buy order. If price goes up, you make money, and if price goes down, you lose money, and if price goes sideways, you wait it out until either or, all right? So you profit on the upside and you lose money on the downside, and then you obviously sell, to close, all right? Everyone knows about that one. It's the short selling one which gets people really messed up, all right? So I'm going to explain this. I'm going to explain it simple, and then I'm going to explain the breakdown of it, but I don't want you to overthink it too much. Now there's also, so now all of a sudden you're selling. All right, so let's go back to the last slide. I said there was a buy button and a sell button. If you want to short sell, all you do is click the sell button first. Sell first, says it right there. And that means if price starts going down, you make money. And actually, you make even more money on a down market because you make it faster. So we start talking about that time value of money, that financial equation. So you sell first and you buy to close. I'm going to explain it in the next slide. This is all you need to realize, is that you're a speculator of price. Period. You're a speculator of price. That ownership word, I want you to try to get it out of your vocabulary. Yes, technically, do you own stocks? Yes. But my joking sense of humor comes in and I say, are you making decisions at the board meeting? No, you don't really own it until you go to cash. That's the difference between unrealized profit and realized profit. That's a better way to get into this because you don't start asking yourself questions like, well, Mr. Green, how do I sell it if I don't own it? Well, I'm going to show you in the next slide, but you don't really own it. All right. Short selling. So this is how it works. Like I said, you don't have to understand this to actually implement it. You just have to click the sell button. All right. But this is how it works because I know there's people that are like, how does it work? All right. So that's you, the short seller. So your broker allows you to do this stuff. Maybe you didn't know that. So let's say you want to make money on the downside. What you do is, so let's even make this a joke. Even when you click the sell button right here, it automatically does what I'm showing you right here. So you don't have to know this, but it's good to know it, I guess. If you don't understand it, that's fine. Don't worry about it. So what you're going to do is you're going to borrow shares from your broker. And then you're going to sell to the market. So now you owe your broker the shares and you sell it to the market. Now, let's say the trade goes in your favor. All right. So you sold first and then you buy to close. So on the last slide, in the first slide, we bought and then sold. Now we're selling first and then we're buying second. So let's say the price goes in the right direction. Market comes back, you buy to cover, then you return the shares to your broker, and whatever the difference is in that profit margin, you keep. And that's it. That's how it works. You don't need to overthink it. Okay. At the end of the day, you are just a speculator of price. Is price going up? Is it going down? Or is it going sideways? That's it. That's all you are, is a speculator. I don't care if it's a stock, a commodity, a currency, Bitcoin, whatever. Is it going up, down, or sideways? And then last but not least, consolidating markets. Consolidating markets, there's, the two asset classes that allow you to make money in a consolidating market are options and Forex. I would probably say options is the best one. There's a lot more opportunity. You can do, you're trying to collect premium in the options market. So there's trades actually when there's no volatility to the upside or the downside, just average consolidating markets. And that happens sometimes. It's a trader's worst nightmare, but it's also, and I'll tell you why it's a trader's worst nightmare, because that's when traders usually make a lot of mistakes because they get too anxious. They want to be in a trade. I think some of you that have been trading know what I'm talking about. So instead of just sitting on their hands and waiting for some movements, here's what you could do. Take some spreads, take some vertical spreads, take some sideways trades and options. There's ways to make money in it. FX is going to allow you to do something called a carry trade in the foreign exchange market. A carry trade is basically, it's just kind of the same as collecting premium, but it's along the same lines. Basically, you're evaluating a country's interest rate in comparison to another country's interest rate. And if that country has the higher interest rate and you're bullish on that currency going into the 5 p.m. rollover every day, you collect money. And if you're on the wrong side of it, you lose money. So it can actually go in both directions. All right. With that being said, how I want to conclude this lesson is this. I have 3 musts, Mr. Green's 3 musts. One is proper strategy and risk management. 2 is leverage. 3 is a 3-directional trading strategy. You have to, anybody that's a pro has to be able to have give themselves an opportunity to be able to make money potentially in all market conditions, up, down, or sideways. It's a must.